Good morning, everyone, and welcome to the Trade Talk podcast. Today, we'll start with the overall activity or trend in the US markets. As the world markets was waiting for the outcome from the Fed's minutes, and the outcome was more or less similar to the expectation. Fed is not going to cut the rate on immediate basis. They will watch economy related data closely, and if the data is high, then they are not cut the rate in the near term. Also, they are going to continue with the same path of inflation close to 2%, and maybe that's the reason we saw some weakness in the first half of the trading session, but in the second half, because of specific strong numbers from Nvidia, uh, we saw a smart rally in almost all the indices. S&P 500, Dow Jones, as well as Nasdaq, all uh, recovered from their intraday lows and closed almost at the highest point of the day. Finally, if we go through with some other global macros, because there we see some impact of the Fed minutes as well as Fed's meeting. Bond yield, which was around 4.27, is now jumped to the levels of 4.32, as US is not going to cut the rate on immediate basis. But the dollar index is trading little bit below 104, as the statement was not that strong. It was like as per the expectations of the street. So dollar index is little bit weak, but crude is still at same levels. So all these global macros are still not in favor of emerging markets, Indian markets, but certainly the quarterly performance of a few companies is now ruling the market. US markets close at the highest point of the day. Asian markets are trading with positive gains, mixed gains, and GIFT Nifty is up nearly 60-65 points. Now, if we go through with our markets, then 22,000, 21,950 is going to act as major support for the market. Below 21,950 only we can expect weakness, maybe up to 21,850 or 750, but 21,950 it should not break. That is the overall view. On the head side, 22,100 will act as major resistance, as it was the previous resistance level for the market, and as the market closed below the levels of 22,100, now we again need to give more weightage to the 22,100. Above that only we can expect some bullishness up to 22,200 or 22,275. The ideal strategy should be to again look for reducing long positions about 22,100, and we should look for adding some fresh positions in the market or on indices if it manages to cross the level of 22,275. So that is what the next level to watch out for as a trend decider level. Finally, for the Bank Nifty, there also we saw resilient activity despite weakness in the Nifty 50. We saw good amount of strength in bank stocks. 47,400 is the level to watch out for. Above that only we can expect bullishness up to 48,000. Otherwise, it is going to consolidate between 46,900 to 47,400 levels. From the overall other indices, Reliance is still consolidating, but now the breakout is expected about 2970. So about 2970 only we can expect some bullishness. Otherwise, it is going to consolidate. Metal stocks did well, and there we are expecting further more activity. All the stocks like Tata Steel, Steel Authority, Jindal Steel and Power, and JSW Steel are all showing bullishness. So this particular sector should be on the watch list. And finally, if we go through with a few tech companies, because Nvidia did really well, so in that we may see some activity in mid cap IT companies rather than activity from the large cap companies. That's all from my side. With this, I'm ending today's morning podcast. Thank you very much for listening me. Have a great day to all of you.